Morning, Jim Barrett from RJO Futures. Wednesday morning, July 2nd. Notes and bonds lower this week. Yields have popped up about 10 basis points and from last week's lows. 2.5 in the note. Now we're cruising at 2.6, and in the long bond, 3.33, 3.4 was the lows. Now we're at 3.43. Why? Well, some good economic reports yesterday, which pushed stock indexes into new all-time highs. Put some pressure on demand for notes and bonds. They struggle. They're going to struggle a little bit with such strong economic numbers and such strong economic, or rather, upside price performance by competing investments. That is the stock market. Anyways, the U.S. factory or manufacturing hit the highest rate in 4 years. At the same time, China's numbers were positive. More positive numbers this morning. ADP showed jobs up at 281. Expectations for tomorrow's number were more like 215. So another positive number, more pressure, a little bit of pressure for the notes and bonds. Yet, at the same time, Yellen has said over and over again, and she is speaking shortly, by the way, this morning, that she's not interested in raising short-term rates until the unemployment situation is in much better place than we are currently. Upticks in economic activity are not going to get the Fed to move and to tighten preemptively. They're going to move judiciously. They're going to wait and wait and wait until this unemployment situation is better. Anyways, it would take maybe the stocks to pull off their highs in a substantial fashion to put some kind of upside in the notes and bonds. We're not going to have it. However, the downside is limited also. U.S. rates look good compared to other sovereign rates. In fact, the spread over German bonds is near a record high. And, we live in a dangerous world in between what's going on in Russia and Iraq, et cetera, et cetera. A flight to quality could happen at any time. So we're really locked tough in a tight range. And kind of proof of that is a report on Fox Business News yesterday that Goldman Sachs, that is all set to slash fixed income employment. It shows, how these markets have changed. The notes and bonds, such a big deal. Income from an income producing standpoint for these trading firms. Lately, it's just been tough times in there, and the tough times are likely to continue. I can reach at 800-500-2461 to discuss any futures market. Thank you. Futures and options on futures may involve substantial risk and may not be suitable for all investors.